Everyone wants free money, and in today's video, I'm going to show you the easiest way to make consistent money from the stock market. That is by selling options and picking the right time to buy them for a multi-bagger return. Now look, you might be skeptical, and so was I before I worked for Goldman Sachs and learned why this strategy is so easy. But by the time you finish this video, you're gonna have everything that you need to start making consistent income right away. My name's Henry Moldavsky, and in this video, I'm going to show you my strategy for selling options. You'll see visually, step by step, my game plan for my non-losing strategy that outperforms every other strategy out there. The first thing you need to understand is the difference between buying options and selling them. Now, I've preached this before, and you might think this isn't anything new, but look at it this way. At the top of the results, there are traders at the 1% who are winning over 90% of the profits. And these traders are bringing in obscene amounts of money, $100,000 a month or more. And because they know the secrets I'm revealing in this video, they aren't working very hard to make that money. So look, when you buy options, you pay a premium for the option. When you sell options, you are collecting the premium from the option itself. The money goes from the buyer of the option to the seller of the option. Since both of the buyers and the sellers are betting on the option, there's only going to be one winner and one loser. The option is going to expire in the money or out of the money. The buyer hopes the option expires inside the money, so he realizes a profit, and the seller is betting that the option will expire out of the money. This is the goal of buying and selling options. And here's the first interesting secret. The percentage of winners in buying options and selling options are not equal. The actual statistic by the Chicago Board of Option Exchange was that 90% of options expire worthless. Anecdotally, from my experience, I've also seen many of my students in Discord come from an option buying background with very poor results, oftentimes very inconsistent, and losing money and experiencing wild swings before taking my consistent income approach to investing. This statistic doesn't take into account closing early or rolling the option, but the point is almost nobody I personally know in my 10 years of experience is really crushing it on a long-term basis as an option buyer. I've seen it done, but I'm being honest with you on what I believe works and doesn't work based on my real world experience. Now, of course, stick to this video because I'm actually going to show you 2 different times I would be buying options. But for the most part, selling options does seem to be much more superior to buying options. The option seller usually collects free money and has a steady cash flow if they use the right strategies and exit properly. Which brings me to the second secret, technical analysis. Understanding technical analysis can be the difference between buying here and buying here. I don't love buying options, but again, some of the craziest returns do come from buying options, but here's the technical terms that you have to understand first. Now take some notes because messing up on technical analysis could cost you dearly. Starting with the very important terminology, price action, movement of an asset's price over time on a chart. Then all-time high, or ATH, the highest an asset has ever been in price. This is a very important indicator as I learned while working at a hedge fund, and an all-time high in a stock usually signals very strong momentum that presents an opportunity for you to take advantage of. This is the only time, in my opinion, buying options makes sense with your profits from selling options. You also need to understand support, the point in the market where a stock has tremendous levels of interest due to being at a cheap price or perceived as cheap by the general market, because this game is all about psychology. If you can outsmart other people, that's where the real money is. Especially watch out for a double bottom pattern. This is a pattern where a stock hits a previous support, but it bounces. A double bottom pattern has the price action of a stock hit the same low level, but it doesn't break support. Keeping a close eye on candles, you want to see 1, 2, 3 green candles, and the stock typically explodes up, giving you a double-digit return potential. Setting a 2-to-1 risk to reward ratio, you can make some obscene amounts with options. Now, obviously, I'm not a financial advisor and nobody can predict the future, so this isn't advice, but I've seen people make straight up a killing with simple indicators like RSI and some of the other ones like Bollinger Band and a simple, and I mean very just simple moving average of 30 days or 60 days on the simple average chart. The most successful people don't get rich off of some unique business model. In fact, most find inefficiencies in the market and exploit it over time, because even if you can get 3% more per month, because of that, they scale disproportionately fast. So as an investor, even if you have a small advantage, that advantage is going to compound over time. And we all know with compound interest, that's how you get very wealthy. So really what it comes down to is don't think that you need a lot of money or expertise to start cashing in hard with option trading. You can start small and pick cheap stocks and start off by selling put options on them. Let's go over an example. Let's say that you love Nvidia stock, you believe this is a growth story, okay? We'll talk about Palantir. We can even do NEO. Again, it doesn't matter which stock you pick. The only factors you need to consider is that you like owning the stock, because if you like owning the stock, the worst thing that can happen is the stock ends up pulling back and you're forced to buy it at the strike price. But if you want to buy it at the strike price, you're literally getting paid to do what you want. It's like your parents saying, hey, go wash the dishes. But for some reason, you just love washing the dishes. Or your spouse tells you, hey, I want you out the house. I'm going to rent you a Lamborghini so you can go ahead and just drive that Lamborghini and give me some alone space. You're like, hey, sure, I'll drive a Lamborghini as long as you pay for it. I mean, that's basically what's going on here when you get paid to buy a stock that you want. So the first thing that you want to do, you want to click sell, and then you want to go to put options, okay? You can pick a number of dates. I'll look at the December 3rd, because basically what I'm going to show you guys here is that if you scroll down, right, you do want to pick an out of the money option, because the closer to the money you go, the premium will be higher. However, you will have a greater risk of assignments. Going down $10 out of the money, you basically get a $10 discount on what Nvidia is trading at today. This option will expire in just 2 days, so it's not even a week, but in a single week, you can get paid $488, or basically $500 for just a few days of waiting if Nvidia pulls back. Now, again, if Nvidia pulls back to $325, that's fine, because you're selling the $322.50 strike. So until Nvidia, or unless Nvidia on December 3rd is below $322.50, then you don't have any obligation to buy the stock. You got paid your premium, you get to keep your premium, and you can open up a similar or different position on the next following Monday. With selling puts, you need to realize that money is all around you, and this is the safest strategy hands down. You don't need to get into the more complex strategy or get sexy with option trading to make consistent income. Now, the next success secret, the morning sets the tone for the rest of the day. Because with option trading, or just trading in general, nobody talks about profit when you're up 50% in 3 days, but you should be taking profit. Everybody else gets greedy and doesn't take profit. I'm a fan of opening a position like a sell put and letting it expire on the last day, doing minimal work and making passive income. But I do check my position in the morning, and if I just open an option and it's made 50% in 3 days, there is no point for waiting another 2 or 3 weeks for the remaining 50%. When I sell options, I want to make money as the option decays in value. But if the option decays very quickly because the stock moved away from my put, then why not take profit? It's a mental win. And the worst thing that unsuccessful investors in options do is get greedy. If you start incurring losses, a majority of people start chasing those losses. I know you've been in that situation before. Let me know which stock has hurt you in the past and what did you learn from it. And taking more aggressive bets as you lose money is a very bad idea. Successful option traders have patience, and if you're watching now, I want to congratulate you, because I'm going to cover even more useful information to make you a 1% trader, because you have the attention span to make it this far in the video. Just look at the top 10%. Still amazing $50,000 a month results and over 85% win rate, but it quickly tapers off with the middle 50% only bringing in $5,000 per month and winning just 55% of their trades. The bottom half all loses money, with some losing significant amounts of money quickly. Now, luckily in my Discord community, I haven't seen anyone who follows my trades be in the bottom of performance. So next I want to discuss the proper way to sell calls. This, along with selling puts, is the best strategy that I have used to build my personal wealth to 7 figures. When I sell covered calls, I pay close attention to delta. Managing your position is highly dependent on how you open your position. Open it correctly by picking a balanced risk to reward ratio, and you will reap some very handsome profits. The covered call is even more special in some ways because you can profit from the option decaying every single day, it's going down in value, and as well as the stock moving up. I love selling both weekly and monthly covered calls for income, but I was an idiot in not following any rules when I first started using the covered call strategy. The first mistake is picking a strike that is too close to the current stock price. Most years the market goes up, so it's important to pick a 30 delta when selling covered calls. That's what I have found to be the most successful. Now, bad traders pick a super far out of the money strike because they think the stock is going to the moon, but that leaves money on the table. It's also generally bad outside of a bear market to sell calls that gives your stock basically no room for capital appreciation. So let's go over a covered call example. All right, so for you guys, I'm going to do a real life call example. I'm going to be selling a covered call, one call option on Tesla stock. So I'm looking at the option chain. This is called an option chain. I'm going to look at October 23rd, and actually they have earnings this week on Wednesday. So I don't want to sell a call option that is near the money. I want to sell an option that is very far out of the money. I'm going to click sell call, and essentially what I'm going to be doing here is going back to the exit strategy that I was talking about. When you sell a call option, once it hits your strike price, that call option is going to be called away from you. The stock is going to be called away from you. 100 shares of that stock, in fact, are going to be called away. So I don't want to sell something near the money because I don't want to exit Tesla at 435. Just in case Tesla runs up, I want to make sure that I'm going to be selling at a much higher price. I'm going to scroll up, and I want it to be at least 90% in my favor. This strike price of $500 is way out of the money. It's very far away from the current price of $432. In fact, it is $70 away, or for 100 shares, that's going to be 70 times 100, or about $7,000. So I want to earn at least $7,000 this week. And if I don't earn that, that's totally okay, but I'm not ready to sell Tesla until it reaches 500. That's what I'm saying here. So I'm going to click 345 or 343. I'm going to click continue. And guys, I have the stock. I have a bunch of shares of the stock. So for me, selling one call option, it's being covered by the shares that I hold. So what I do here is I click one, and here we go. 3.45. 345, I'm putting it because here is the bid and here's the ask. 3.45 is the lower end. It's the bid. 3.5 is the ask. So I'm going for the bid. And me talking so much, I just lost $5. 3.4. And I want to get executed here because there's only 7 more minutes until the market closes. So I'm just going to place this trade in real fast. Here we go. Yep, that is totally okay. They're just saying you're agreeing to sell 100 shares of Tesla at 500. See, I told you guys, it's 100 shares. You know that though. You know that. I'm not going to play here. What happens there is you collect $342 right there on the spot. And I opened this up because I was waiting for a whole lot of time. I was like, any second now, I'm going to go over this. When am I going to get filled? Finally got filled. Anyways, the volatility is very high on Tesla specifically because they have earnings this week, and options are priced based on volatility, which is how much a stock moves up and down, as well as how much time is left. And now this option is trading fairly expensive. I mean, that's a lot of money to be made for an option that is so out of the money. I mean, it's 90% chance not likely to reach this point, but there's still a lot of premium because of earnings. So earnings, during the week of earnings, stocks have a whole lot of volatility because a lot of surprises may happen and investors know that. So for Tesla, I sold a call option that is very far out of the money because I want to be safe and I do not want to be executed, but I want to collect some premium. So I hope this example was helpful for you. Now let's finish the video. There is an anomaly in the market, which basically just means that something is very unusual, and that's that options are overvalued. So selling them does give you an advantage. My strategy is to pick options that give you a 70% chance of success, or higher when coupled with a good technical and fundamental analysis, which is what I do in my group live. You will see an outperformance in your results. If you do want to check out my group, which is the first link in the description, you can get all of my trades, my coaching, and all of my ideas and research. It took me 7 years to become a millionaire after growing up very poor from an Eastern European parents that came to America with nothing 28 years ago. And honestly, if I could do it, so can you. I had so much pain being broke and not being able to afford heating or air conditioning, and the lack of money really made me search for these trading secrets that I've shared with you in this video. So please rewatch this video as needed, leave it a like, and consider joining the community. I have the first link in the description, and here's another option video that you have to watch if you want to master option trading.